All right, so let's just look at current interest rate. So 30-year rate, I always start off with this webpage, Mortgage News Daily, just to kind of break things out. This is the much less commercialized, like bankrate.com is just fishing for you to click in information and turn that into leads. So Mortgage News Daily is a bit more respected in the mortgage world. So right now, 30-year fixed national survey is at 6.34. That assumes a pretty strong credit and somewhat minimal points, maybe a fraction of a point. The 15-year at 5.84, and the last several months, or even over the summer, I was really kind of touting the 20-year. A 20-year loan right now can be had at 5.99 and maybe even a little bit less. So that 20-year we're talking a lot about, and a lot of buyers are taking advantage of. So somebody who might have maybe bought in the last year or two and is looking at an interest rate, sitting at 6.75 or 7%, we're having conversations about, is it worth it to refinance? Pulling cash out sometimes is a motivator. Usually it's to get a lower interest rate. Well, what about a lower term? So you take somebody from 7 to 6 and switch them to a 20-year. Their monthly payment might not change, but they might be shaving off 9 years off the back end of that mortgage, and that can be pretty powerful stuff. So just to give you a little bit of a feel on that, and let me click on the 30-year just to give you a little bit more of a micro analysis here. All right, so here's what we've been looking at. I think I'm sure most of you have hopefully been on my calls here the last couple of. So this is more or less think year to date. So we started off that year over 7% pretty comfortably, and frankly, kind of hung there through the summer. Here we go. There we go. June or Memorial Day weekend rates sneaking just under 7%. Then we have the jobs report that came in August. We have a jobs report that came in September. And then jobs report in October. Oh, wait a second. We didn't have a jobs report in October. Why is that? Because we had a shutdown. All the data was in, but there was nobody working that day to release it. So I'll come back to that in a few minutes. But just to give you kind of a little feel for where things are at. These two milestones I like to point out. Uh, I'm sorry, September 16th. That is, I can't remember, that day or the day after that the Fed dropped the federal funds rate. Look what happened to interest rates. They went up almost 1/4% within 2 days of the Fed meeting when they dropped interest rates. Here we go again. Rock bottom interest rates, October, right? Might be at the wrong window here, but yeah, October, Fed makes their move, rates go up 1/4%. Federal Reserve Board is due to meet December 18th, and they're right now everyone's expecting them to drop another 1/4%. So just if we look at the recent history, okay, cool. Maybe rates will sneak back down, and then as soon as the Fed drops interest rates, they'll go back up again. So we're seeing a little bit of a cycle here. And just because this happened the last two times doesn't mean that's what's going to happen next time. But just to give you a little feel for what we're looking at. The big news that's potentially coming is the shutdown may be over soon. And if it is over soon, you're going to see a whole bunch of information dumped out there. Not overnight, but you've got an unemployment number in October, an unemployment number in November that we miss. In fact, let me pull up this grid. Looks like I got someone in the waiting room. So this is not anything that's set in stone, but if the government shutdown were to end here with the House vote that I think is happening later tonight, this is perhaps a proposal of when we'll start to get information. So inflation reports. We did get one inflation report in October, and the reason why that was required to be put out, I believe, is because everyone's social security number kind of hinged on that. So they had to release that one, albeit about a week and a half late. October CPI inflation report, I don't know, they may just skip it. Uh, the November inflation report, supposed to come out December 10th, probably coming out a week later. That's the week that the Federal Reserve Board is going to decide on what they're doing about the federal funds rate. Non-farm payrolls, these are job numbers basically. October report should be out maybe next week, could be this week, but probably next week. The October report that was due to come out last week, probably coming out at the end of this month. And then the November report that comes out in December, probably a week delayed. So we're going to get a whole bunch of information, albeit stale information, but it's all going to be dumped out at one point. So interest rates, the bond market, stocks, I mean, all of your major money markets that usually watch these with a real close eye have pretty much been in the dark for going on 6 weeks. So there could be a bit of movement up or down, and nobody knows what's going to happen. Chris and Don and I were talking earlier today, just with the lack of information, kind of almost surprised that the market isn't playing a little bit more safe and almost pushing rates up a little higher than they are right now. So anybody who's locking in right now, I think they're probably making a safer choice. And of course, when you lock in a rate, there are some recourse, there is a bit of an insurance policy if rates go down to where you can take advantage of that if it meets certain guidelines and such. But GDP, just putting in another one, a little bit late in November, PCE, PPI, these are all the big data points that the mortgage market pays the most close attention to, at least in the current times. But anybody have any thoughts or questions? Don or Chris, you want to piggyback on any of this?
Yeah, I just right now with where the market is, I can't believe that more people aren't scared that some of these reports would look bad, to be honest.
Yeah.
Um, but I mean, if it's all trending in the right direction, all these come out and it's, basically follows the same tune that the Fed has been hoping for. I I'm afraid of painting too rosy of a picture, I think. But
Yeah. And the big thing that CPI or any inflation reports, we want inflation down. Unemployment, bad unemployment numbers are bad for the economy, but good for interest rates. So no one's rooting for a bad unemployment report, but the headline always says as soon as unemployment comes out, it'll be that first Friday of the month, typically. Right at 8:30, it says expected, and then new jobs, and then the number is higher or lower, and the market immediately reacts to that. Now, there's thousands of little variables within the report, but that's just kind of the headline reading. So ultimately, that's what we'll be looking at, new jobs. DJ, anything you wanted to add?
No, I don't know how we can produce any numbers from the government being shut down for the last month and a half.
Yeah.
So it's going to be a lot of overreacting to these numbers, I believe, and I don't
Yeah.
know how that's going to bode for our market.
Yeah, it's kind of like the market hasn't had a reason to sort of hit the panic button or dramatically drop. The fact that, rates have kind of the past 6 weeks have been relatively quiet. I've seen them tick up slowly a little bit, but it's been relatively quiet. And I don't say it's been nice or relaxing. It's anything but when there's so much unknown, but nonetheless. Right. And then obviously, the Tuesday meetings and such, we'll always chime in to let you know what's going on. But and we'll occasionally do a little post. We don't want to inundate the KWGM Facebook page, but if you're curious yourself, or as I always tell people, I've got some people who, they're on their way to a listing appointment or meet with a buyer, and they just want a quick little rundown. Hey, give me a 30-second spiel about what we're seeing about interest rates. Do we think they're going up? Do we think they're going down? What's kind of the temperature of the market? So just feel free to reach out to us. While we're at it, I've got more and more buyers kind of independently wanting to run payments on their own. So as we do a pre-approval, typically the pre-approval often isn't one conversation. I mean, it can be, but I like to kind of stay in touch, communicate with the buyer through and after the pre-approval. But if you've got a buyer who wants to run payments on their own, I always say, hey, call me or email me or text me when you have a property in mind, and we can plug in the numbers, let you know what current rates are, go pull the taxes. We do have a handful of calculators on here. I always caution a buyer, just like any other web page. Obviously the interest rate may change day to day, so we can keep the buyer in the loop as far as what the current rates are at. And then PMI. PMI is different for everybody. You can have 5 buyers with the same credit score buying the same price home in the same neighborhood, and they may have different premiums because the debt to income ratio, or because they're self-employed, or because they're a first-time home buyer. So just if keep that in mind, but I do want to make sure everybody knows that this is a resource that's out there. So the next one on my list here. So what I was kind of doing is just pulling from current headlines just to kind of get some conversation. We can talk about the 50-year mortgage. We'll come back to that one in the end, just because that was a hot topic the last couple of days. But Northeastern Ohio, I mean, what I'm seeing are price reductions. I'm hearing kind of secondhand from realtors that some people are taking the house off the market. I know I had a family member put a house on the market, and it instead of getting 20 or 30 showings like they were expecting, they just got three, and ended up getting an offer and everything worked out. But it does feel like the market switching. It seems like what we see here locally is sort of delayed from what we're hearing a little bit out west and in Florida and some other parts of the country. But I mean, not I see that few heads nodding, so I think we're probably on the same page there. With prices reductions or houses market getting stale, this is where I am seeing a lot more offers get accepted with seller concessions. I'm seeing a lot more offers where, I mean, we were seeing FHA offers get accepted anyway, but a lot less pushback related to FHA. Knock on wood, FHA appraisals. I mean, obviously it's going to be case by case, house to house, but not seeing any like, oh, geez, I can't believe they, are nitpicking over this. Any of the FHA repairs I'm seeing are pretty obvious. Exposed wires, handrails. I've chipped paint, obviously, from time to time, but we work through those. And if you need a conversation with your seller, if you're a listing, or if you want us to have a conversation with the listing agent on your offer about that, let us know. But the other part we talked about many times in the past is a 2-1 buy down or a 1-year buy down. So just to walk through what that looks like again is, let's say I have a $300,000 house. And I'm talking to the seller about a price drop, or the seller's maybe pushing back a little bit, doesn't want to drop, $10 or $15,000 or anything dramatic like that. You can fund a 1-year 1% buy down for about 3/4%. So on a $300,000 house, if you get the seller to agree to a 2,000, approximately $2,250 seller credit, you can use that to buy down the buyer's interest rate 1% for 1 year. In that exam, just giving you kind of a rough idea, but that example, you'd probably save about $170 a month each month. So it's a nice little draw. Might set your house apart from the rest. You could put a sign in the front yard. You could put it in the MLS comments or wherever that might be appropriate. But it seems like the last couple of years around this time of year when it seemed like the market might be shifting a little bit, that was a heavy focus. So just like talking with a buyer or a seller, if you want some, little coaching on how that conversation is had, or you want us to put together some general flyers for you on that, or have a conversation directly with the seller, that's something we are more than happy to do. Chris and Don, anything I'm forgetting there?
Nothing. You explained it
Yeah.
perfectly.
Yep.
Man, I'm doing good. I got two critical judges here, so I'm always a little nervous. But so always a conversation is, hey, I got a first-time home buyer on the fence, or maybe I have someone ready to go, but they couldn't quite have the funds. What's out there for first-time home buyer stuff? So not a whole lot has changed over the past couple of months. We still do OFA. OFA July 1st came out of the gates with like as low a rates as they've had in years. Got slammed, kind of took their foot off the gas. Rates went up a little bit. We're seeing that back improving a little bit. So just to show you, all right, let me get this. So here's where OFA's rates sit right now. So let's say you have a hero, a nurse, a teacher, a police officer who's not getting down payment assistance. They can get an FHA loan at 5.5%. That is absolutely below market. FHA is a little bit more expensive. They have a little bit higher fees, but still worth a conversation. Conventional 5.75 for a hero, or 6% for a non-hero. Still a pretty good deal. So as interest rates fluctuate, OFA rates don't always go in sync as rates go up and down. Sometimes they trail behind, sometimes they go a little bit faster. So sometimes often rates will go up but OFA lags behind. So all of a sudden you might see conventional 6.5 or 6.6, and OFA is still camped out at 5.75. That's a great place for us to nab it. So first-time home buyer, single family or two-person household has to make below 98 a year for most county. If you've got three-person household, kids included, you can go up to about 116 approximately. We still have our Smart Start program. Just had a buyer this morning who uh, I asked him, how much income what's your income? He said about $90,000, which is true. However, when I looked at his pay stubs, he's on a base of about 75 and then has 15,000 of bonus and commission. He's under contract, and the numbers worked out perfect. I don't have to count his overtime and commission because his income is below $78,650 for the year. I'm giving him a 2% grant. So he's buying a house for $185,000 and we're giving him $3,700 towards his closing. So that was a cool one to put forward. So if you've got any questions on these or other programs, let us know. There's some community-based programs as well. We're closing one next week through the City of Euclid has the EdCore program. So they still require the buyer to put in their own portion for down payment and closing costs, but this buyer is getting an extra $10,000 essentially free. So they're putting 3% down plus $10,000. So their PMI is lower, their obviously equity position is stronger, and it's a nice deal. So if you bump into programs like that, we could almost assuredly work with just about all of them. So if there's something you're interested in or something you catch wind of, and those are great niche products. You as a realtor don't have to do much else. It does require a separate inspection and lead-based paint inspection, but that's not much extra time for the buyer to have to be able to get $10,000. And you could be a niche for that because let's say Euclid happens to be in your market and you're selling homes there. It might blow your mind how many agents do business in Euclid who have no idea how that program works, or maybe they've heard of it and thinking, it might be long and tedious like OFA or something else, and they stay away from it. It's a great program. So, Chris and Don, anything you guys want to add on that?
No. Well, yes, actually. If you scroll down, have you,
Oh yeah.
the Next Home program, it used to be that I never did one before. Have you guys done a Next Home through OFA before?
Earlier this year, I think.
Okay. It used to be that it was priced basically out, like it made no sense. Well, if you look at the rates, I mean, it's a little bit higher on the rates, but they're really not that bad. And you do get assistance with it. So even if they're not a first-time home buyer, you might have some down payment assistance for them out there. So,
That's a good point.
yeah, I for the longest time, I basically told everyone, well, you're going to want to be a first-time home buyer, or this program's not going to make a whole lot of sense just because the rate's so high. But when they did all the changes, I think that they made that a little more competitive. So.
Yeah. Well, and touch on the MTC. I know you've done one of those recently.
Yeah, yeah. So the MTC allows you to write off on your taxes a portion, depending on where the home is, because there's target areas and non-target areas, a portion of your mortgage interest, and you get that in the form of a refund on your taxes. Um, you can do that program without coupling it with the down payment assistance. There's, you don't go with the OFA rates. It's relatively inexpensive. The state charges 500 bucks to sign up for that. I've been telling most people if you do that, you're basically going to make your money back in the first full year of writing off all that interest. So.
Mhm.
Because it's a direct write-off. I mean, if you're getting 2,000 in the credit and you owe 1,000, you're actually gonna get $1,000 refund because it's a direct write-off against any taxes,
Yeah.
not a deduction. It's a direct credit.
Right. Yeah. Yeah. I mean, that's money. I've been telling people that's cash for you at the end of the year. So if you want to factor that into your closing costs, more or less, you basically can. Um,
And there's income limits to that as well, right?
yeah, they're the same as the down payment assistance.
I
It's
had a
that's normal.
buyer who he was just like a real analytical engineering spreadsheet brain type, and he said, so if I max this out and got 2,000 I think it was 2,000 every year, and he just gets that and just writes it towards the balance. He's just building. I said, yeah, do that. He's like, so of course he said after 5 years he's going to put $10,000 towards that just through this program. I go, yes, and the fact that you're prepaying the mortgage, your amortization is going to speed up too. So this this nerd loved it. So yeah, it's a good program. All right. So, creative financing, I tell you, every one of these, I can't help but mention if I don't mention DSCR or portfolio lending and non-QM stuff, it gets asked about. So I pretty much put it on the docket each time. So the DSCR, we're doing a lot of those, as you might expect. As CrossCountry Mortgage does over $1 billion in these loans a year, a billion, which is more than a lot of area banks do, regional banks
I think
do.
we're up to 2 billion this year.
2 billion. All right. That's right. And we're still in November.
Yeah.
The one program I wanted to share with you, I have it's an asset base. So I have a gentleman he's retired. He has Social Security and pension, but it's a real modest amount. It's under $1,500 a month. And he needs to refinance his mortgage. And this would work if you were purchasing it as well, of about 240,000, let's say. He does not make enough income to qualify for that. And his assets, he's got plenty of assets, but they're not in a 401k or IRA. I mean, he's just got them in mix of investments, a lot of it just sitting in like a high yield account, a few real. So he has about, we'll call it $400,000. So he can obviously pay off this mortgage if he wants, but he kind of relies on that money to, invest, to make a little interest, make a little profit. And that's his retirement, even though it's not, what we consider a traditional retirement account. We're giving him the mortgage because we see he has more than 125%. So if we needed a 240 mortgage, I have to show that he has $300,000 in assets, which he does. We're approving him on the loan on that. We're not even putting the rest of his income on the application because it's not necessary. He has pretty good credit, not even perfect credit, but he's just over 700. His interest rate, he's not getting a 6.25, 6 3/8. He's paying a little bit higher interest rate, but he's saving quite a bit. And again, he's kind of has to do this refinance because of um, a split. But nonetheless, it's great, and his payment is going down, so he's excited about this. So just know we do a lot of outside the box loans, and we'll keep talking about that, and when we have the platform to do that. But just keep in mind that that's available.
Hey, Sean, so what you're saying is a guy that did not qualify for a refinance, but really needed the money, that he didn't want to pull out of his stock account. We were able to get him financed on this product. Okay. You are not going to find this product at a bank.
Yeah,
So
no,
Third
you're right
Fed,
about
First
that.
Fed, PNC, Key Bank, US Bank, they don't have this product.
No. Yeah, and if the guy wanted to, buy an investment property with it and do a DSCR loan, we could do that too. And put that in an LLC and do all sorts of, I don't want to say crazy stuff. It's stuff that used to be crazy years ago when someone would call and say, "Hey, can you do this?" Like, oh, come on. I mean, I just missed another call from somebody with a 780 credit score, probably has a, full income. So these aren't just deals that, I probably overuse the expression break this glass in case of emergency. Sure, we're always going to look Fannie Mae or Freddie Mac, but this is a first option for many just because, they're slightly outside the box, and it's a go-to. We're aggressive with the interest rates. And it's great. It's a good point on that. All right, so I touched on a few of those. Another headline that came out, and this is one of those, oh, cool, this sounds great, but what does it mean? Fannie Mae came out and said, we're reducing our minimum, we're eliminating the 620 credit score requirement. Doesn't mean they're going to do a loan for everyone, no matter what, but and even if you have a 650 credit score, Fannie Mae or Freddie Mac aren't automatically going to do the loan. But what they basically had said before is if you're at 619, can't go Fannie Mae unless you have there used to be another exception if you had a spouse with a certain credit score. But the short version is if you've got somebody with a 619 or a 595 credit, they're putting 5% down, not likely going to work. And it probably isn't going to work at a 650 or 660 score. But if you got somebody putting 30% down with a 502, or excuse me, a 592 or 610 score, that might work. Whereas previous to this, it was an automatic disqualifier with Fannie Mae. So if you've seen that headline, Fannie Mae drops minimum credit score requirement, that's where it's going to come in handy. And I recently, I did the summer, I had somebody putting 30% down, um, on a $550,000 house, something like that, and we had to go FHA. Reason why? They had a bankruptcy less than 4 years out. They had a Chapter 7 bankruptcy. The credit, I mean, from an investment standpoint, from a lending standpoint, this guy's pretty low risk. There was a medical collection or something that kind of went on the score, which we don't care about, that hit the credit report, and medical collections aren't even supposed to go on the credit report. But long story short, this maybe he can go conventional Fannie Mae now. He couldn't before this rule was, and FHA was the only option. So, yeah, just wanted to run that scenario by and let you know what that was. Any
So
thoughts or questions?
I got a question about that, Sean. So basically, in the background, they'll look a little bit more and be a little bit more lenient on some things in the background. However, you may have to still put more money down. It's not
Yep.
just like, okay, they're just going to be a little bit more lenient in the back, but because you have a 590 credit score doesn't mean that you're just going to automatic, if you have payments on time, different things like that. It's really just a little bit more leniency, basically, like you said,
Yeah.
with student loans and stuff like that.
Yeah, as opposed to just saying automatically no. Now the door's open for, the automated underwriting system or a human being to kind of review it. And I'll never say the lending world, I would love it if the banking world, the lending world went to common sense. It'll never go to straight common sense, but taking off that restriction leaves the door open for, here's another one. Let's say you have somebody who went through a divorce, and let's say my wife and I got divorced, and I kept the mortgage in the mortgage is in both of our names, but the divorce decree says I'm keeping the house and I'm in charge of the payments, and I miss a bunch of payments. My wife's credit is going to be, ex-wife's credit is going to be totally mixed up because I didn't do what I was supposed to. So does that disqualify from her being able to buy a home? Nope. There was an exception process for that. It was a bit tedious, but where she would have been able to buy. Now, with this restriction gone, she's putting a large enough down payment. There may be no extra paperwork needed other than the divorce decree that said, "Hey, my ex was supposed to pay that and didn't." So, I mean, that's just one of a few examples, many examples that might fit that.
Okay, thank you, Sean.
Yeah, thank you, Lex. A good question. So do you let's see, we sort of talked about most of those. So I'll touch on the 50-year mortgage, and I'll go quickly through this. And if you want me to run some like simulated payments or give kind of a personal opinion on it, I might even do that. But right now, so let's go back to hey, you guys see this? All right, I'll come back to that in a second. But so let's go back here to just where we have the national average on interest rates. 30-year, let's call it 6.3. That actually improved a little bit since we clicked on here before. And a 15-year at 5.8. So talk was, hey, well, maybe we'll do a 50-year mortgage because taking that 30-year to 50 years is going to lower the payment. It's going to slow down the amortization schedule a ton. But the big thing to kind of realize is, okay, if you're going from 15 to 30, the difference in interest rate is about 0.5% here. If we go from a 30 to a 50, anybody want to take a guess what's going to happen with that interest rate? Is it going to be the same as a 30-year? Is it going to be less than a 30-year, better than a 30-year rate, or worse than a 30-year rate? Answer, worse than a 30-year rate. I mean, there's a good chance a 50-year mortgage is going to be maybe not 7%, but it's going to be moving in that direction. So just
I would say you're probably going to be anywhere from 0.4 to 0.5 or so above the 30.
sounds about right. So you're talking 6.7, 6.8, 6.9. And if you take a $200,000 mortgage and run the amortization schedule, the savings isn't going to be that much per month. I would say it will be lower, obviously, but we're not on a $200,000 loan. You're not talking about $250 lower. You might be looking at, and I apologize for not running the number ahead of time, but it might be under $100. So are you really going to literally mortgage the future to save $100? Would it help with affordability? Yeah, on some level, but it's going to move the needle so minimally. I don't think that would make a big splash. But that's just me. And whether or not this comes to fruition, it's a whole nother, conversation. I don't know if Chris or DJ, if you have any thoughts on that, but so that just kind of the take on it. And when that announcement came out Monday, I had on CNBC out here or MSNBC, whatever it is, and they had the CNBC, sorry. They had a chart up there of like, look at all the savings. And I'm like, the basis of the numbers that were being run, it was under like, I don't say a false pretense, but the rate wasn't adjusted. So it was kind of a slanted sort of misinformation, I think, on what the real result would be. But we'll see what happens. But Chris and Don, I'll let you guys chime in.
As far as the 50,
Yeah.
I really don't have any.
That's okay.
It's
Yeah.
probably, look, it's like anything else. Does anybody on this call realize we have a 40-year loan as well?
Yeah.
And Chris, Sean, I know I've never done a 40-year term. I don't know if these two guys have done a 40.
No.
But that just tells you how popular a product will be. Look,
Yeah.
it's something that they're trying to put out there to try and make housing somewhat more affordable. Will it work? I don't know. I don't believe so. It's our job as loan officers or mortgage consultants to present all options, advise, and help you make the best decision going forward. So it's not for us to decide whether the 50 or 40 doesn't work for you.
Mhm. Good point. And the affordability, obviously, when someone thinks of, oh, more, my house payment's high, obviously prices have gone up, rates were higher. I mean, keep in mind, 2 years and 2 weeks ago, rates topped out at 8.3%. So we're a full 2% better than that. So just keep some perspective on that. But what else has gone up? Homeowners insurance is my homeowners insurance has not quite doubled over the past 3 years, but close to it. I'm loyal to a fault to my insurance guy I've had for over 30 years since I was 16 years old. So I just tipped off how old I am, but yeah, it's not insurance isn't insurance isn't likely getting cheaper. Thankfully, we're here in the Midwest, so while we're feeling the pinch and the impact of it, not nearly as much as what you're seeing in the coast and down south.
Nor property taxes.
Well, yeah, and property tax too. Obviously, everyone took it on the chin, especially Cuyahoga County residents last month. But there's a lot happening there. And I'll mention this too. I don't know that everybody is aware. Eric Akbar, I know most of you, anybody on here is probably knows him, but he's got a separate company doing some really amazing stuff with helping people get their taxes down. Petitioning or arguing tax valuation with the county. So anybody has a customer or them personally, reach out to him. A pretty amazing service that he has on that. So anyway, want to throw that in. So yeah, that was what was on my list. Any other topics that Chris and DJ, obviously just pile on anything I did here, but anyone else want to add into anything we didn't touch on or anything we did that you want to expand on?
I thought we covered quite a bit today. I thought it was really good.
Good.
No, I thought
agree.
this was great also.
Good. Thanks, Lex. Thanks for coming on, and thanks for. Oh, there's Kelly too. I was gonna say thanks for having your face on there.
Thanks,
Little
guys.
nods help, and you get to see Don and Chris all the time. So, all right. So I think that's it. I'll wrap. And if anybody needs anything, like I said, on any of this stuff, if you want a little give me a 30 or 60-second snippet because you're gonna do a little face talk or going to sit down with a big bougie customer and you want to just sort of rattle off some of the headlines, just feel free to call any of us on that and we can help you out.
Thank you so
Awesome.
much.
All right.
Thank you, Sean.
Thanks,
Don,
guys.
Chris.